Now what we want to do is we want to turn our attention to the qualified and adverse opinion. So we've got a problem right now, and we're going to take a look at how we would ultimately write the opinion for a non-issuer. Remember, non-issuers are going to be, in this particular case, they are your non-public companies. And how do we write those reports? So let's take a look at both of them. We're going to start with the non-qualified opinion. And remember, we're going to have an intro, a management responsibility paragraph. We're going to have an auditor's responsibility paragraph. We're also going to have the basis for the qualified opinion. You'll notice that one's popping up. And then we have the qualified opinion. So we'll start out the qualified opinion for a privately held non-issuer. And you'll note here, we're going to start with the introduction. We have audited the accompanying financial statements, which comprise the balance sheet as of a certain date, income statement, stockholders' equity, cash flows for the period then ended. Nothing new there. We're then going to jump to the management responsibility paragraph. And frankly, same standard paragraph. Nothing new there. We then move on to the auditor's responsibility paragraph. And once again, that also is the same standard paragraph. We don't have anything new that's going to ultimately be added. So no modifications needed there. We then move on to the auditor's responsibility. And once again, the same standard paragraph applies to the final conclusion that we do have enough evidence to support an overall presentation. Now we're going to add one extra item. We believe that the audit evidence was obtained is sufficient and appropriate to provide the basis for our opinion. We're now going to talk a little bit about modifying. And here it is, the basis for qualified. You'll note right here, it says, the company's financials do not disclose something. There's something missing and we're having a problem. In our opinion, disclosure of this information is required by accounting principles generally accepted in the United States. That's a brand new paragraph that's just been added in. We then go to the opinion paragraph. And here, this is modified as well because it says, in our opinion, except for the omission of information described in the basis for the qualified opinion paragraph. Right there, that's the new words. And then everything else, exactly the same. We're now ready to turn your attention to adverse opinion for a privately held non-issuer. So you'll note you have your intro, your management responsibility, your auditor responsibility. Then we have the basis for the adverse opinion. And then, of course, the adverse opinion. We're going to start out with it's still called the Independent Auditor's Report. We're going to have the intro, no changes. We're going to show the management responsibility paragraph. No changes there either. We then move on to the auditor's responsibility paragraph. And once again, exact same standard paragraph. And of course, the work that we do, same paragraph right there, no changes. We then move on to an additional part of the auditor's responsibility, which is the same, where we say we believe the audit evidence we have obtained is sufficient to appropriate have an adverse opinion. Notice there's the modification, just like we had with the except for. You're adding that extra word in there. Then we have the basis for the adverse opinion. And it says, as described in Note X, the company did not consolidate a financial subsidiary that it had acquired because it had not yet been able to ascertain the fair value of certain subsidiary material assets and liabilities. This investment is therefore accounted for by the cost method. Under accounting principles accepted in the United States, they should have consolidated because it is consolidated in the company. Ultimately, it said, had they been consolidated, it may, and right, in this case, it may have obviously adjusted and had a material effect. The effect of the consolidated statements for failure has not been determined. That's clearly a brand new paragraph that's been added. And then, of course, our opinion is modified because it says, in our opinion, because of the significance of the matter described in the basis for adverse opinion paragraph, the consolidated statements above, and here's the kiss of death, do not present fairly. That's the big one right there. Do not present fairly. And then, of course, we sign, we give the address, and then, of course, the date of the auditor's report.